Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Sage5.tv, and I thought it's about time we created a mini series on real world assets because I think this narrative is about to take off. So, because of that, I thought it's a good idea to actually open a mini series, and that mini series will be made up of everything real world asset or anything related to real world assets or the RWAs. And we're going to be doing mini videos because if we did a one-off video, I think it will probably last into 3-4 hours. That is the content we've been researching throughout the past few weeks, if not months. But before I jump into the pilot, you want to call it the pilot to our real world asset series, please know that what I'm going to share with you in this video is not financial advice. If you do require financial advice, please approach someone who's trained to give you financial advice. The information contained in this video is just for educational as well as entertainment purposes. And this content is also not targeting UK audiences for the reasons that the UK authorities do deem anything crypto related to be extremely risky, and they're trying to protect you just in case you end up aping into some of these assets and lose your funds in your savings. That's not good, is it? Please always do your own research. If you're not subscribed already, guys, please consider subscribing to our channel. We want to grow the channel, and we know over time we are going to be one of those leading channels within the space because most of the content we generate does not expire. It's there for good education. You can always refer to it and find out what's going on. And even one of our series where we do DEWA or our risk evaluation, you can always go back and see what we said at the time when we're reviewing a project is still relevant, or they make their own tweaks to make sure the information they hold for themselves is still relevant. So that said, let's come back to the real world mini series that we just talked about, RWA mini series, so to speak. So let's start by introducing to you guys. There might be others, new to the space, to the crypto space, or you may be one of those people who's been within the space, but you don't quite get what real world assets actually refers to, because it's not an obvious concept, real world assets, because it touches quite a few things, and it's not all about your deep in projects and stable coins and stuff. There is more to it. So let's start by introducing the concept and describing what it is. Well, real world assets, also known as RWAs, refer to tangible and traditional financial assets that are brought onto blockchain via tokenization. In simple terms, tokenization means creating a digital token on a blockchain that represents ownership of an off-chain asset. For example, token of a house, a bond, or a share of a stock. This bridges cryptocurrency technology with traditional finance. By recording asset ownership on a blockchain, transactions can become more efficient, transparent, and accessible. RWAs are central to the tokenization of traditional instruments because virtually any asset, real estate, equities, bonds, commodities, and so many others can be represented as a crypto token. This enables fractional ownership, that is, buying small shares of a large asset or a fraction of a paint, and peer-to-peer trading of assets that historically have been illiquid or hard to access. So in essence, RWA tokenization is transforming finance by digitizing real-world value on blockchains, marrying the trust and transparency of decentralized ledgers with assets familiar to investors. That is what cryptocurrency and blockchain technology is trying to do here. So why is this important that we actually come to a point where we say we want to create a mini series on RWAs? Well, bridging real assets on-chain can democratize investment. For example, it allows more people to invest with smaller amounts, increasing liquidity in markets like real estate or art that typically trade infrequently, and reduce intermediaries, potentially lowering fees and settlement time. During 2024 and 2025, we have seen accelerating interest from both crypto projects and institutional players in RWAs, suggesting that we are at an inflection point where blockchain technology moves beyond native crypto tokens into the vast world of traditional assets. So we are going to split this series. We are going to have an investor's perspective where we are looking at market opportunity in tokenized real-world assets, as well as providing you guys with a technical deep dive examining which blockchains and protocols are leading the RWAs movement. So let's start by looking at the investor perspective first. That's part one of the mini series. What is the significance of RWAs for investors? That's what we are looking at here. So for you and I as investors, RWAs on blockchain represent a convergence of traditional asset value with the efficiency of crypto markets. By tokenizing assets such as real estate or bonds, investors can gain 24/7 access to trade these assets, use them as collateral in decentralized finance, or diversify into assets that were previously out of reach due to high minimums or illiquidity. Here you're talking of where they say only accredited investors can invest into some of these financial instruments and so forth. That's no longer the case. The significance is huge though. The tokenization could unlock trillions of dollars of assets for more fluid use within the global economy. The World Economic Forum noted that over $255 trillion in assets like stocks and bonds exist in traditional systems, but only about 28.6 trillion are actively used as collateral. That is a massive gap. So tokenization can unlock a portion of this value by making ownership transfer easier. In practice, we are already seeing tokenized shares of funds, for example, BlackRock's tokenized money market fund shares, being used as collateral in DeFi lending platforms, creating new yield opportunities. For investors, RWAs bring the familiarity and cash flow of traditional assets, for example, real estate rent, bond interest, into the crypto ecosystem, which can be especially attractive during volatile crypto markets as a source of stable yield. In short, RWA tokenization is turning blockchain into an extension of traditional capital markets, thereby broadening the investable universe on chain. That is quite a powerful story that we're trying to tell here when it comes to RWAs. Let's look at some of the asset classes that can be tokenized. One of the remarkable aspects of RWA tokenization is the breadth of asset classes it can encompass. Virtually any asset with an ownership right and value can be tokenized as long as legal frameworks support it. In this video, we are going to cover some of the major asset classes already being explored for tokenization and why they are very promising indeed. Let's start off with the most obvious one, which we've been talking about, which is real estate or property. Both commercial and residential real estate can be tokenized. This allows investors to buy fractions of properties, for example, $100 worth of a rental building, and receive proportional rental income. Real estate is one of the most cited RWA use cases because it's a large illiquid market that could benefit from greater liquidity and access. So for example, tokenized real estate platforms have sprung up, allowing purchasing of tokens representing ownership in single-family homes and earning rental yield. So you don't have to actually buy the whole house now. You can just put your $100 or your $250 as long as you deem the reward is worth it, because there's no point in putting $100 in and you're only getting like a penny per month or something like that. I'm just stating the obvious here. Next, you got equities or stocks and private equity. Shares of companies, whether public stocks or private equity in startups, can be represented by tokens. This could broaden access to venture capital or allow 24/7 trading of stocks. Listed equities have seen experiments like tokenized Tesla or Apple shares. For example, this was offered by the now defunct FTX exchange and Binance before, or they were banned from doing so by overreaching regulator. And this was allowing trading outside traditional stock market hours. Private equity and pro-IPO shares are also being tokenized to provide equity to early investors. Next, you got debt instruments such as bonds and loans. Tokenized bonds are a fast-growing segment. Governments and companies have begun issuing digital bonds recorded on blockchains, and platforms are tokenizing pools of loans like mortgages or SME loans into tokens for investors. Tokenization can automate interest payments via smart contracts and enable peer-to-peer bond trades without traditional clearing houses. Notably, in Germany, for example, Germany leads in tokenized bond issuance, accounting for 60% of such issuance thanks to clearer regulations. Even private credit, such as loans that banks make which are not traded, are being tokenized. For instance, pools of trade finance loans have been turned into NFTs and used as collateral on MakerDAO platform. Next, you got commodities and precious metals. Hard assets like gold, silver, and oil can be tokenized, typically by issuing tokens redeemable for a certain quantity of the commodity held in vaults. Gold-backed crypto tokens, for example, Pax Gold, are an example, giving investors on-chain exposure to gold bars. Beyond metals, commodities like energy and agricultural outputs could be tokenized via warehouse receipts. This brings liquidity to commodity markets and lets investors diversify into hard assets easily. Next, let's look at carbon credits and environmental assets as other traditional assets that can be tokenized. Carbon credits, which represent a ton of CO2 reduced or removed, have been tokenized to improve transparency and liquidity in carbon markets. By putting carbon credit on chain, it becomes easier for companies and even individuals to buy, sell, and track provenance. This is part of a broader trend of ESG assets, if that is still a thing, because I think most people have been leaving that organization or institutions. For example, renewable energy credits were part of the SCG initiatives and they were being tokenized, potentially channeling more funding into greener projects. Next, you got art and collectibles. Fine art, collectibles, and luxury goods are being tokenized. Each token can represent a fraction of a painting, a classic car, a rare wine bottle, or even a luxury watch. This fractionalizes high-value collectibles, allowing investors who could never afford or even find a Picasso painting to own, say, 1% via a token. There are already platforms selling shares in tokenized artwork and sports memorabilia, tapping into 1.7 trillion collectibles market. We then move on to investment funds, where fund managers are tokenizing shares of funds, for example, mutual funds, ETFs, and hedge funds. A pioneering example is Franklin Templeton's on-chain US government money fund, the US first registered mutual fund on a public blockchain. Each fund share is a Benji, BENJI, token on Stellar/Polygon, giving investors the same exposure as the traditional fund but with on-chain transferability. Similarly, BlackRock and others have created tokenized man-market fund tokens like BlackRock's Build token that represents shares in ultra-safe bond funds. Tokenized fund shares make it easier to integrate traditional funds into DeFi or to settle trades instantly rather than the cumbersome traditional process. Other intangible assets include intellectual property, copyrights, music royalties, or patents that can be tokenized. For example, a musician could tokenize royalty rights to a song, selling tokens that entitle holders to a share of future streaming revenue. This gives creators new ways to raise funds and gives investors exposure to cash flows from IP or intellectual property. Similarly, revenue sharing tokens can be created for infrastructure projects or any asset that generates income. So to conclude this part, any asset class from home equity to invoices or infrastructure is potentially on the table for tokenization so long as legal ownership can be wrapped in a digital contract. This primary benefit across all these categories is to open up investment, fractional, global, 24/7, and improve liquidity and efficiency in markets that are often siloed and slow today. In the next segment, we are going to be looking at the market size and growth projections. So if you want to know more about that, market size of RWAs and tokenization and growth projections, you need to subscribe and click the notification bell so you can actually get an understanding of what the size of the RWA and tokenization market is. We'll bring you some actual numbers that are relatable and genuine based on fact. Until the next one, guys, this is FD for Sage5.tv signing out for now. Bye.